got to check in on shares of the big three U.S. automakers here. The industry bracing for 25% tariffs on all vehicles imported to the U.S. set to start April 3rd. Our next guest says these tariffs are the worst possible outcome for the industry. Joining me now, we have Itay Michaeli. He is TD Cowen's analyst here. Itay, thank you so much for joining us. Talk me through this call. You call it the worst possible outcome for automakers. Why?
It was close to the worst outcome, and thank you for having me, of course. Expectations in the weeks leading up to it had become more positive in terms of what the outcome could be. So it's only 25% tariffs. Now, there are some exclusions we can talk about, but certainly, by our estimation, would have a significant impact potentially here over the near term. Over the longer term, there could be substantial mitigation actions that could substantially lower the impact, but there would still even there be potentially a lingering negative impact on the industry. And of course, it creates a lot of incremental uncertainty in the near term.
Lou, where do you agree and disagree with that?
No, I agree. It creates tremendous uncertainty. My difficulty is how do you model that out? And maybe it's a question for you, Itay, is how do you model out that you might have a 25% tariff for 3 days or 13 days? Or, where's the sensitivity analysis? How do you take that into account for your models?
Yeah, no, it is challenging. I think in the models, you have to assume that the tariff is here to stay. Also, we did not assume any real kind of price increases to offset some of it. The key delta in the short term and longer term thinking is, do you see production capacity for vehicle assembly get moved into the U.S.? Of course, if that were to happen, and to your point that even that does not happen overnight, that could be several months at the least, maybe even longer than that. Then once that happens, the impact does get mitigated quite a bit. Again, there's still uncertainty. I would note we're still waiting on additional detail. Could there be additional tariffs? So to your point, we still don't have, I think the industry itself is still kind of crunching the numbers themselves in terms of what this actually means. But over the longer term, particularly if you were to have a production capacity move, it would of course mitigate substantial initial impacts of such tariffs.
And what we're trying to do for our audience of investors here is at least walk them through how each individual company and each ticker could potentially be impacted. So Itay, I'm curious, can you walk me through the likes of Ford? You say it's the least exposed versus Stellantis, perhaps the most exposed. What are you looking at to indicate that?
Sure. I think both Stellantis and GM are substantially exposed, particularly because they do have quite a bit of very profitable truck capacity, pickup truck capacity in Mexico. Ford has the most kind of U.S. exposure amongst the D3 for production. So it would be better positioned. And of course, Tesla outside of Detroit 3 is sort of the relative winner here, just given 100% U.S. production, substantial U.S. sourcing for Tesla, as well as potential market share gains as some of the segments that the Model Y competes in would have a substantial portion of the vehicles competing with Tesla under some sort of a tariff impact. So it really just comes down mostly to the footprint and exposure that an individual automaker has in Mexico and Canada. Stellantis and GM do have substantial exposure. And of course, GM does have other imports as well from other countries in the world that could be another incremental impact to consider there as well.
I've got a question for you. I don't know if you heard, I'm not a fan of Tesla. I haven't been for a while, but you're convincing me on the U.S. domestic production could be an advantage. But I have a question too. How much of your model weights the valuation on their just U.S. EV sales versus these future bets on autonomous driving, humanoid robots? I mean, what is the weighting in your model to give you attractive valuation for it?
Sure. Our weighting is really largely the EV business, but we do have considerations in our valuation for upside to future revenue streams from autonomous and robotics, which we do believe are real. I think on the autonomous side, the one call we've made is that the path to win in autonomous for Tesla does not have to go through directly an urban robotaxi model. There are other models maybe that are being a bit overlooked in the common discourse tied to consumer AV for new services that could be done in much easier domains for autonomy. But we do think Tesla could stand up a successful AV business that not only could generate incremental revenue streams, but also create a much more compelling value proposition for the vehicles themselves. So kind of our call on autonomy is that it doesn't have to be just the straight kind of path into dense urban robotaxi, which can be complex. And there's a lot of skepticism out there on that. There are other models that Tesla actually fits really well into that could be successful for new revenue and maybe even help address some of the kind of EV demand issues we've seen in the past couple of years.
And are you concerned at all about some of the consumer backlash that we've seen from Tesla? And if so, are you modeling that into your forecast at all at this point?
We are concerned. Yeah, it's definitely another kind of layer of near-term demand risk one has to consider. But we did publish a report last week that kind of did some simulations around, what happens if Tesla were to lose market share in some kind of the blue counties, but potentially gain some in red counties. And there's a lot of assumptions within that, but we did do a bottom-up model for like literally every U.S. county. And there are scenarios where the longer-term impact could actually be a net positive, because remember, EV penetration in certain parts of the country is still very low. So if those regions were to kind of awaken and see additional growth for Tesla over time, that could offset potential near-term losses that they may face in certain parts of the country. But of course, when these things play out, the bad could happen, but before the good. So yes, we are in near-term still focused on this as an incremental risk, but longer term, there could be offsets that maybe even could yield net positive sales gains for Tesla in the U.S.
Really great overview there. Thank you so much for joining us this morning. Appreciate it.